What is up guys, welcome to the Belgian Blue Academy. In today's video, we'll be taking a look at Tesla and what we can expect to see moving forward with earnings coming up this Monday. Now, before getting started, it would be greatly appreciated if you could leave a like and subscribe. We just opened up the channel and it helps out the algorithm. Now, without further ado, let's jump right into it. Tesla is one of the most widely held shares in the market. It is known for having the bullish backing of ARK Invest CEO Cathie Woods.
Our confidence in Tesla has grown as we've done research on what ride sharing potentially could add. It could limit the risk significantly. It's a much more profitable business than electric vehicles. And we do think, even though I think there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. I don't think anyone has in their models anything for ride sharing. And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real world driving data, no one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous, we believe, is going up, and therefore our price target will probably follow at some point.
Tesla also has the very bullish backing of numerous billionaires, one of which is Ron Barron, that has been holding shares since 2014. Ron had this to say regarding Tesla and where he sees it going to in the next 15 years.
The opportunity here is not for them to do 35,000 cars on the way to 50 or 100,000 or 2. The market is for 100 million cars a year. Like maybe they could do, in 8 or 10 years, they could do 1 million or 2 million cars a year, but the potential, they could do 10 million cars a year in 15 years. So the potential is enormous.
Now, Tesla has had some controversy recently, mostly in regards to the crash that occurred in early March when Tesla dropped to $563 per share before bouncing right back up to $600. However, I think this is overshadowing some very bullish news regarding record production numbers and new models possibly being released this summer. Tesla produced record numbers of vehicles in Q1 of 2021, despite dropping production of Model S and X to 0. They also broke a record for number of deliveries in one quarter. This is big, as there was a huge shortage of chips needed in manufacturing globally, as well as supply chain issues. Q1 is usually Tesla's weakest period production-wise, so this is a very good sign. It is predicted that with increased supply of chips and new production plans, this number will continue to rise every quarter for the foreseeable future. This is something that I would really hammer home, as the demand is obviously there and still emerging, and they are now increasing supply. Tesla also went as far as creating a new team to accelerate use of new materials in production. The aim of this is to improve quality while also reducing costs, which should lead to increased revenue growth. Again, a huge focus on increasing production to meet growing demand. Tesla also announced a new branch in Nottingham, England, a potential increased attempt at gaining a foothold in the UK market, which is relatively untapped when it comes to electric vehicles. Elon Musk drove his Cybertruck prototype to a new site in Austin, Texas, where they plan to start manufacturing very soon.
Bring on the Cybertruck! Cue music.
And the recent controversial crash is proved to not be Tesla's fault, as nobody was in the driver's seat, and it is rumored that the drivers of the vehicles were under the influence. Another important thing to keep in mind is that the Giga Texas plant has been producing Cybertruck pilot line this whole time. Release to the public is expected in 2021, and with all the attention that has been surrounding this vehicle in previous years, this is bound to bring some volatility to the share price, most likely in a positive sense. I would say that out of all these new reports, the two most important things to notice are the increased production despite limited parts is pointing to more huge future growth, and the EV market is still growing and Tesla owns 80% of it, so this production increase is only going to increase company value. And as a second point, the Cybertruck pilot production and expected release this summer has been pushing the market to be even more bullish. Tesla's financials in 2020 are also giving me a lot of confidence for the future. With a market cap of $721 billion, they have the highest market cap by a very long shot in the automotive industry, bouncing between $715 and $740 per share after a drop to $563 at the lowest in early March. This is to be expected after its abnormal growth last year. A period of regression was inevitable, and Tesla seems to be consolidating between $715 and $740 per share as of the time of this recording. This consolidation is laying a platform for what I feel will be another bull run to around $1,000 per share next year. With a reported revenue growth of 28.31% last year, this is pretty outstanding during one of the toughest economic years for potential customers in recent times. A large part of this is said to be attributed to Tesla's Bitcoin investments. This indicates a very healthy return on investment and a good use of company assets. And to me, this is a very bullish signal. Now, both bullish and bearish analysts expect a massive rise in Tesla revenue over the coming periods, which would obviously point to the company and share value going up. Tesla currently has a price-to-earning ratio of 1,138.76, which is quite crazy. A normal price-to-earning ratio of an S&P 500 listed company is usually between 13 and 15. Tesla's outstanding price-to-earning ratio can be viewed as both very positive and very negative. Bearish investors would say that the stock is highly overvalued and destined to drop significantly in the coming years, essentially making price-to-earnings an irrelevant metric when it comes to this particular stock. I tend to take a more bullish outlook on this purely because of Tesla's reputation and market share, and obviously the future-focused nature of the industry. My personal thoughts on Tesla are that according to all fundamentals, this is what price action should look like in the next 5 years. Obviously, the market isn't perfect and various events will cause spikes and drops, but using all available data, we can estimate a future price in the year 2025 to be around $2,500 per share. Assuming a 50% margin of safety, Tesla is not a strong immediate buy, but will reap huge returns in a 5-year window. Without a doubt, a very strong buy long term, in my opinion.